Okay, so my dear friends, this video is for educational and informational purposes only. Please do your own research or consult a professional financial advisor before investing your money. Thank you. If you own Netflix stock, you have probably noticed the recent bounce back after the previous drop. And here is the good news, the business itself is not broken. In fact, Netflix recently brought in a solid $12.25 billion in quarterly revenue. The stock only saw a temporary dip earlier because people expected too much, but the fundamentals are incredibly strong. Here is the positive side. Netflix is becoming the world's default TV network. Their new ad-supported plan is growing incredibly fast, aiming to double its ad revenue to $3 billion this year. Plus, with strong margins over 32%, the company's structural math works perfectly. When a business keeps expanding its margin like this, your slice of the company naturally becoming more valuable over time. But there are some risks. The big boost from blocking password sharing is starting to fade. Also, heavy competition from YouTube, Disney, and Amazon makes it harder for Netflix to keep raising subscription prices. Right now, the stock is trading around $77.11, showing strong recovery momentum. However, smart investors always look for an extra margin of safety, keeping the stock on a watch list and waiting for any potential market pullback closer to the $70 demand zone could offer a much safer entry point for long-term buyers.